Alright, wow, it has been a minute since I've made my last video. A lot has happened. If I recall correctly, the last video I made, we were actually approaching the 13.75 handle. I believe I called for 13.750, and we got like 23 points away from it on the NASDAQ, that is. Yeah, there's 13.750. We basically tapped it, and that's where I wanted us to bounce. So pretty close on that call. We have started to see the housing market slow down significantly. I expected that was going to actually cause this move down, but it was more so caused by the fact that inflation was still running high and the job market is still super hot. And that's the problem that we face right now. And my honest outlook on this, we have non-farm payrolls tomorrow. It's currently Thursday, October 6th. I think we're going to beat the non-farm payrolls number again. We just keep beating it, and I've probably explained this already, but the more people have jobs, the more money they make, the more they spend, the worse inflation gets. We also have a lot of data pointing that people are switching jobs, and when they do this, on average, they're seeing a wage increase of 15%, which is higher than that of inflation. So we don't want that to happen, and that's why the Fed needs to see the labor market close down a little bit, and slow down, and have new positions, like available job positions, shrink. So a cooling in the labor market. Jerome Powell has mentioned that numerous times. We need to see that happen before we can get this inflation under control. From a technical standpoint, this is definitely a buying spot. The weekly on the NASDAQ here, this is major support, and sure enough, we bounced from it, right? I caught a little bit of the move. I unfortunately sold a bit early, but it is what it is. So two scenarios happen. Say we meet the expectations, or we don't beat it by much, or we even miss to the downside on non-farm payrolls tomorrow. You'll see a rally, I'm sure of it. Unfortunately as well, you have Putin escalating things with Ukraine still. That's not looking good. You have Kim Jong-un, North Korea, launching a ballistic missile over Japan. That is also not good at all for the stock market. But the day that the missile happened, the stock market flew. And there's rumors that the Federal Reserve is buying bonds, because if we go to the bond market, you can see a couple days ago, we're right back up to the highs though, unfortunately. So 4.3% on the 2-year. We've been inverted for quite some time now, but bond yields are high. So why would you buy a stock if it keeps going down and you can get 4.3% on your money for doing nothing, and it's a guaranteed return, right? So it's a battle basically, and bonds are very enticing right now. The dollar index did dip down quite a bit to the downside, and that coincided with the stock market flying yesterday, as well as, or sorry, not yesterday, Monday and Tuesday. We saw the stock markets rally quite hard, and that was because the dollar pulled back. We've also heard China is planning on dumping US dollars to get that a little bit more at a more reasonable valuation, because the dollar just keeps getting stronger and stronger, and that affects foreign trading. Like, if any country is trying to buy something from the United States, they basically have to print more of their own currency to be able to purchase whatever they're trying to purchase, and that causes more inflation for themselves, which a lot of countries are dealing with as well. So the dollar getting stronger like this is not good. I guess it'll just keep going at this point. Nothing really holding it back. But what I was saying is the Federal Reserve, people are thinking, came in on Monday and started buying up a ton of bonds because they went way down. It was like one of the hardest drops, the sharpest declines in a day in bond yields in quite a while. So probably the Federal Reserve, and there's talk because of midterms for Biden in the United States. It's kind of unfair for his campaign, I guess, or his administration to be like, he is to blame, I guess, right? Like, the stock market's tanking under his administration, so let's not vote for him. Well, if they can prop up the market and make it more fair, I guess, because it obviously isn't totally his fault that we have all this inflation, it makes it more of a fair battle, I guess. So if the Fed comes in and buys up bonds, that's going to send the stock market up, as it did. But once that's out of the way, back to our normal scheduled program, which is stock market crashing. At this point, though, you have to also ask yourself, so if you buy the 2-year or you buy the 5-year, if I can search this up, see if I can search up a 5-year, see what they are yielding. Okay, so 4%, right? So let's say the NASDAQ takes 5 years to reach its all-time high again. If you look at the chart right now and you measure from the current price of the NASDAQ to its all-time high, you're looking at approximately 48% return on investment. If that takes 5 years, divide 48 by 5, you're looking at like 9 point something percent annualized. That is a lot higher than a bond. The bond is paying 4% here in 5 years, like 4% per year. So technically, like it does make more sense, I guess, to buy the NASDAQ at this point and continue averaging in as it goes down. So my take on this is, if we do get a horrible jobs number tomorrow, start buying the NASDAQ. This is not financial advice by any means, but I think buying into the NASDAQ or other index funds, but I just prefer the NASDAQ because that's quite a lot of upside potential. Tech stocks have been beat down pretty hard. I do believe that there is money to be made, dollar cost averaging in, as there has been, and you're going to see rallies like this as well. We may see a few of these before we actually get a sustained bull run, but even this was like a 20% rally here, right? 20% in like 2 months, take that. Especially, we knew we weren't out of the woods yet at this point, right? So yeah, now we just need to see the capitulation. There's also rumors that retail traders and investors are now becoming net sellers, and historically speaking, when retail traders capitulate, that signifies the bottom of a market, and we are starting to see that happen, and therefore there is reason to believe that we may be getting close to the bottom. What left is there to be negative is the question. We're going to start seeing the job market slow down as the rate hikes start to come into play, and then that's going to bring inflation down. And as soon as we start seeing consistently declining inflation, that is when the bull run starts. Now, there's obviously the chance of a black swan event, nuclear warfare. Obviously, the stock's going to go down. If that happens anyway, say there is a nuclear war, your money's not going to be worth anything anyway, so you may as well just invest it. So yeah, just dollar cost average. If we get a horrible number tomorrow, stock market's going to go down. Probably not too much, but I'd expect to see like 3% to the downside tomorrow if we do come in very hot. But it could also be up 3% if we come in below the NFP expectations. So that's it. This could be a wall here. Just watch this support at the 11,000 level. But then ideally, if things keep getting worse, if you can buy the NASDAQ around 10,000, I think that's going to be right around where the bottom is. So that's my non-financial advice, just my opinion. That's what I see going forward.